Hi everyone, just welcome back to the From the Desk video. Two in about a week, so it's a lot going on, but I came across these charts over the last 3 days, which I've attached to this message that have been very interesting. And I guess I wanted to talk more about this theme, about what's going on in the world with inflation, and what are going to be the pressures for interest rates going forward, because it's a key ingredient into these investment markets at the moment. The first chart you'll see is a picture of crude oil over the last 12 months, but more importantly over the last 10 years. And during the last 12 months, from September to September effectively now, the oil price at the moment is about $90 a barrel. A year ago, it was about $70 a barrel. So it's still an increase of about 30%. But if you compare that oil price of $90 a barrel with where it had been at $130 a barrel, we've seen, earlier in March, we've seen that price decrease by about 40%. Steel, I think, is a very interesting one, which is the next slide. So this time last year, steel was $5,208 a ton, and now it's $3,873, which is a decrease of 25%. More importantly now, steel is probably back in line with its cost of steel is back in line with its long-term trend over the last 10 years. So there doesn't seem to be any inflationary pressure around that. Next one, which is copper, and copper's used obviously a lot in the building material sector. It's now being used a lot in the battery manufacturing, and copper for the last 12 months is now down 20%. And again, more importantly, it's it's back in line with some of its long-term 10-year trends, which it takes some of the inflationary aspect out of that. Then the list goes on and on. So you can look through the list. Aluminium's down 12%, and again, 10-year average is good. Zinc's up slightly, but not much. But again, over the 10 years, looks okay. The next big one that I want to point out was lumber. Year to year now, timber's down 5%, and also now the price of timber, and you can see the spike on the long-term chart, is back in line with its 10-year trajectory. So again, the price of building materials and the cost to build a home should be coming backwards quite a long way. Next big chart was freight costs. You can see there the annual change of freight costs across the globe is down probably anywhere from 20% to 20% to 50%. So again, we're seeing a massive change in logistics, therefore, and what gets passed through to consumers. Shipping bottlenecks, that has really improved dramatically, and the next slide shows there. One thing that's been a bit sticky has been semiconductors, and that might continue to be a factor of what's going on in Taiwan and some of the shutdowns in China, but that's still a bit of an issue. So look, just wanted to run you through those. It's certainly factual evidence of where some things sit in the background, and it's going to be very interesting to see then what happens with interest rates going forward, as some of these cost pressures might start to dissipate, and we'll see where the next 3 to 6 months go. So if interest rates start to level off and potentially even next year start falling, then I think you'll see a much better market moving forward. Thanks.